Hello, I'm here today with Roger Johnston from Edison Investment Research, and we're here today to talk about Stobart. Roger, hello. Now, Stobart is obviously a very well-known company, particularly for people who travel on the roads.
Of course.
Could you tell me a little bit about the history of the company and when it was listed?
Certainly. Although Eddie Stobart itself was founded back in the 1940s, the real growth really occurred in the 1980s and 90s. The group was then subsequently sold to WA Developments International, which was owned by the current CEO, Andrew Tinkler, and William Stobart. The group then listed in 2007 through a merger with the Westbury Property Fund.
Now, the group has changed beyond its core transport business. What was the thinking behind that?
If you look at what the group's tried to do, once they actually created the merger, there were a number of rail and logistics assets that came with that group. So the current multimodal logistics business was formed. From then, they've also looked to develop out and expand beyond the core logistics, with the idea being that they have a more robust model. They also have an opportunity to develop new divisions, identify new growth opportunities. So if you look at things such as biomass, and also build out new divisions where they can create value for shareholders.
Now, if this expansion into the non-transport side of the business is successful, what other changes are we likely to see?
If we look at what they're doing, they've basically got a 4-year plan at the moment, which is to develop the group out. Each of the divisions has a core strategy of development, expansion, and then ultimately either disposal, sale, or actually creating contracts for the remaining transport business.
The tough economic environment must have been a challenge. How has Stobart fared?
If you look at the transport business, it's actually managed to continue to grow over the last 5 or 6 years. There have been some occasional areas where it's been difficult. If you look at the chilled business, for example, they've just announced a restructuring and they're actually going to cease that as a standalone operation. So a lot of it has been about operational efficiency. If you look at some of the other businesses, estates, some of the disposals have been a bit slower than they would have hoped, and also the biomass business has been a bit slower. Ultimately though, it is about creating value over the next 3 to 4 years, so from our perspective it is about timing.
Where is the value within the group and how do you think it will be unlocked? And what do you think the risks are involved with that?
If you look at the approach, it is about development, it is about expansion. That will have risks associated with some of those developments, either through planning or the actual execution. If you look at the air business, for example, they've taken London Southend, they've put a runway extension in, they've put a new terminal in, they've put a new rail station in there, and what they've been able to do is actually create a valuable asset in itself. What that's allowed them to do, they now have EasyJet, have 3 aircraft based there. They're going to bring a 4th one on in the summer, and really you can start to see the value that can be created using their internal civil engineering capability. What we also then find is if you look across the rest of the group, each of the divisions has their own value proposition. Transport, it's about growing the long-term contracts, it's about improving the operational efficiency. Estates, it is about actually developing and disposing of those assets, which they're beginning to do, but obviously that's a more volatile division itself, so that can swing the dial quite significantly. Biomass, we've had a bit of a delay due to some of the government decisions around renewable energies, the support to renewable energy and how that's actually panned out. But we are seeing that starting to come through, and we see that a story for 2014. So really it's across the piece. It is now really looking at the next 3 to 4 years. I would say it's not a short-term investment, it's definitely looking over that 3 to 4 year period.
Roger, thank you very much for joining us, and if you would like any further information, please do check the Edison website.